For the last 82 years, the way that you built wealth was pretty straightforward. Buy stocks in the United States and hold them forever. But that system is quietly changing. Gold prices are growing faster than the stock market. Investors are starting to move their money outside of the United States, and countries are also trying to move away from the United States dollar. And here's why you should pay attention, because the people that understand this shift will be able to grow their wealth faster, while the people that don't understand what's happening are going to slowly fall behind. And you can already start to see the impacts of this because the majority of America doesn't have enough money to retire because traditional investment accounts are not growing fast enough while the cost of living keeps going up. So let's break this all down, and I want to remind you that this is why on March 18th, 2026, I'm hosting a live, free, and virtual investor workshop where I'm going to be presenting the most recent research that my firm has identified as to where the economy is moving and how these shifts create new and unique investment opportunities. You're going to see how things are changing in our economy right now and how you can position your money based off of these changes. So if you're an investor, I invite you to join me on this workshop for free on March 18th. I'm doing it live twice, once in the morning at 10:30 a.m. Eastern Time and again in the evening at 8 p.m. Eastern Time. All you have to do is register, and if you'd like to do so, I have the link for you down in the description below. 82 years ago in 1944, the United States dollar became the world's reserve currency. And being the world's reserve currency means three things. Number one is that countries around the world will trade in certain commodities like oil with the United States dollar. Number two, investors around the world, when they want to protect and preserve their wealth, they save their money in the dollar. And this is why, number three, the United States dollar has so much value, because our dollar is not backed by physical gold. Our dollar is just a piece of paper. I mean, it costs 12 cents to print a $100 bill. But the reason why the dollar has so much value is because the entire world has value and faith in the United States dollar, because we have trade happening in the dollar and we have investors around the world saving their money in the dollar. And because so many people have so much faith and value in the United States dollar, it allows the United States to do something in a way that no other country can. It is print more money. The United States government can continue spending money that they don't have in a way that other countries can't, because our dollar continues to have value. This is why the United States government has over $38 trillion worth of national debt. The way that it works, just so we're on the same page, is that the United States government has one source of revenue. It collects tax dollars from taxpayers. And then the United States government goes out and they spend all these taxes and then some, because, well, they don't feel like whatever they generate from taxes is enough. So in order to supplement all this additional spending, the United States government has to go out and borrow this money through debt. Now, where does the United States government borrow this money from? They can borrow this money from people like you and me, regular people. They can borrow this money from institutions and big banks. They can borrow this money from foreign countries like Japan and the United Kingdom and China. Or, if that's not enough, which it hasn't been enough, they can turn to our central bank here in the United States, the Federal Reserve Bank. And the Federal Reserve Bank, although they're called the Federal Reserve Bank, they're actually not a bank because you and I can't go there to deposit money. They're not a reserve because they're not sitting on any cash reserves, and they're actually not federal because they're not a part of the United States government. But they have the ability to print money. And so now when the money gets printed, it's more dollars that are just being created out of thin air, and that money gets lent to the United States government, and then they spend that money. But that has a consequence, because if the government could just print an unlimited amount of money, why do we even have to pay taxes in the first place? Well, the consequence is inflation, the prices of things going up. Not to mention that the second largest expense for the United States government is not our military, it's paying interest on all of this debt, because when the United States government borrows this money, they have to pay it back plus interest. And so now we're at a point where the government is paying more tax dollars on the interest on this debt than they're paying for our entire military. Now, here's why being the world's reserve currency is so powerful, because if this was any other country in the world, countries would stop lending money to this country because they would fear this currency is going to collapse and this country would then go through an economic crisis. But that's not happening here in the United States. Countries keep lending money to the United States because we are the world's reserve currency. But what happens when the world's reserve currency starts to get a little bit too fat, to borrow a little bit too much money? This is a term called exorbitant privilege, and for 82 years, American investors have been getting rich off of it. Why? Because when investors around the world want to invest their money, protect their wealth, and grow their wealth, they want to put it somewhere safe. And where is that safe place? It is the United States and the United States dollar. So we've been seeing money from around the world go into the United States stock market, into the United States bond market, into the United States real estate market to boost these United States assets. While at the exact same time, the United States government has been pumping money into our economy, which creates more jobs, which helps the economy grow. Of course, there's a consequence and risk of inflation from all that money printing, but because we're the world's reserve currency, people continue to have faith in the dollar, which helps mitigate that inflation risk. This is why for previous generations, you could just throw your money into the S&P 500 and be able to retire comfortably and be wealthy. Now, it's still a good thing to do, but because the cost of living has been growing so much, because of all the money printing we've been seeing, that might not work the way that it did in the past. It's still a good thing to do, but you might need some additional gains to be able to retire wealthy or comfortably the way the generations did in the past. And so now, 82 years after the United States dollar became the world's reserve currency, we're starting to see things change, and I'm going to break this down into 3 different categories that I will talk about in this video. Number 1 is because of gold, and gold prices have been breaking record highs year after year after year. Now, the reason I want to talk about gold specifically is because when you buy gold, it's not producing a profit. It doesn't have employees. It's not creating any real value. When you buy gold, it just sits there and looks back at you. Compare that to buying the Amazon stock. When you buy the Amazon stock, you're buying a share of a company that has a bunch of employees that are trying to produce new products, that are trying to sell more stuff, that's trying to create more value. So when people buy gold, it's not because they believe that gold is going to have so much more value in the future. They buy gold because they're worried about the dollar. They buy gold because they're concerned about something happening. They buy gold because they want an alternative way to store the value of their wealth and their money. That's why people buy gold. It's because of fears and concerns. But that's not all. Do you want to know who the biggest buyer of gold is right now? It's not regular investors. It's central banks around the world who have been actively working to buy gold. That way they can strengthen their currencies against the United States dollar. Now, this isn't a new trend. This has been happening for years. But we're seeing this continue to happen where more and more countries around the world are starting to acquire more gold as a way to strengthen their economies and to strengthen their currencies because now they have collateral to measure their currency against. Number 2 is investors are putting their money outside of the United States. In 2022, $92 of every $100 that was invested in global stock flows went to United States stocks. Fast forward to 2026, and out of every $100 going into global stock flows, it is only 26 going to United States stocks because more and more investors are investing their money outside of the United States. And now you're probably wondering, well, where is that money going? It's going into Asia and it's going into Europe. This is part of the reason why so many international markets have been outpacing the United States stock market. Now, the question you might be wondering is why? Why are investors looking to invest their money outside of the United States stock market? And again, there's a few reasons for this. Reason number 1 is that the United States dollar is just getting weaker, like we've been talking about. 2025 was one of the worst years for the United States dollar in almost the last decade. Number 2 is the United States stocks have just gotten kind of expensive. Like if we take a look at the 500 largest companies in the stock market, the S&P 500, well, a big chunk of the S&P 500 is really the biggest 7 companies. They're called the Magnificent 7. If we take a look at the 7 largest companies in the stock market, that makes up more than a third of the entire S&P 500. So we're getting kind of overweight with a few tech companies that are really leading the entire United States economy. And then of course, number 3, many countries around the world are really just growing faster than the United States, so it creates more faster economic and investment growth. Now hear what I'm saying very carefully. I'm not saying that the United States is not the largest economy in the world. We are. What I'm saying is that before, we were the only real investment opportunity in town. Well, now there's more opportunities popping up, and that's where investors are starting to diversify, which creates opportunities, which is one of the things that I'll be talking about on my workshop on March 18th, which is why if you haven't registered yet, make sure you do so. And then number 3, we're starting to see more and more countries start to move away from the United States dollar. And to put this in perspective, back in 2001, 74% of the global reserve currencies were saved in the United States dollar. Fast forward to 2025, and the number has fallen to about 49%, which means more and more countries around the world are not saving dollars the way that they used to. They're looking for alternatives. But that's not all. Do you remember what I said earlier, that when you're the world's reserve currency, one of the biggest benefits is that a lot of trade around the world happens in your currency, the United States dollar? Well, we're starting to see competition to that. For example, the BRICS nations, Brazil, Russia, India, China, and South Africa, were working to create their own alliance. That way they can make trade with their own currencies outside of the United States dollar. And even if we take a look at oil, which is one of the most important commodities in the world, well, for the first time, we're starting to see more countries trying to trade oil not in the United States dollar. Again, the reason why that matters is because our dollar is not backed by precious metal, it's backed by faith. And if more countries have less faith in the dollar, then the dollar has less value. And we're starting to see this in many ways because the Chinese yuan has been growing in value relative to the United States dollar. Now that you understand what this means, let's talk about how this can create potential investment opportunities. Now, I got to remind you, investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. I'm going to go over some specific examples, but I'm not telling you what to invest in. I'm just showing you how you can start thinking like an investor. That way you can build a portfolio that makes sense for you. Now, number one, if you wanted to hedge your bets against the United States dollar, the way that many investors do that is by buying gold. And the thing that I want you to understand about gold, though, is that gold prices do not always go up. Like when the 2008 crash happened and money printing was going crazy with quantitative easing, gold prices skyrocketed from 2008 to 2012. And then in 2012, when it became clear that we were not going to see hyperinflation and that the dollar was going to stay solvent and the dollar was going to stay good, then gold prices crashed in 2012 and they stayed down until 2020. What happened in 2020? The pandemic hit, the money printer was turned on, and gold prices skyrocketed again, and gold prices have been shooting up ever since. Now, if concerns about the dollar go down, gold prices will probably also go down as well. So just understand the risks with gold, that it doesn't always go up. And you could go out and purchase physical gold. That's the best way to do it. Or if you wanted to go out and invest in paper gold, meaning investing in an ETF that's giving you exposure to gold, the way that you do that would be something like GLD. Number two, if you wanted to invest your money internationally, there are a lot of different ways to do that. You can invest your money into a broad fund that's giving you exposure to the international markets. For example, VXUS is an ETF created by Vanguard that's giving you exposure to the total international markets. So if you want a total broad exposure to the international markets, here's one way to do that. If you say, Jaspreet, I want to get a little bit more niche, well, now you can invest into a fund that's going to give you exposure to just developed markets around the world. Developed markets are the more established and larger economies. Something like VEA is an ETF that will give you exposure just to developed economies around the world. Well, let's say you wanted to get even more niche. You just wanted to invest in emerging markets. These are the smaller countries that are a little bit more risky, but more upside potential. Well, you can invest in an ETF like EEM, which is going to give you just exposure into those emerging markets. Or if you wanted to take it one step further and go even more niche into specific countries, well, there are ETFs for that as well. Again, this is just a few examples. INDA, this is an ETF that will give you exposure to the Indian economy. DFJ, this is an ETF that will give you exposure to the Japanese economy. EWG, this is an ETF that will give you exposure to the German economy. So depending on what it is you want to invest in, there are funds available for that. Now, again, this is why it is so important for you to be an investor. Again, I invite you to join me on March 18th if you are an investor, to see how opportunities are changing. And if you got value out of this video, the best thank you is a referral. So if you could, please share this video with a friend, family member, colleague, or fellow investor. That way we can continue to spread this type of financial education. Thank you. The government has quietly started to stimulate markets again, and most people are not paying attention. How do I know? Because on February 5th, 2026, the Treasury Department announced that the Federal Reserve Bank has pumped $90 billion to stabilize markets so